I promised to be back with a second video about the NIO earnings. Were they really that good? What did they mention in the earnings call? In my last video on the earnings, I talked about a couple of questions that are still open. So here back with a new video on the most important takeaways, a look into the future, and also some more details on the earnings call and a deep dive into the numbers. But I hope this video is still relevant to you guys. Hope people are still following NIO. Maybe some of you have already cashed out after earnings, and also these are challenging times, so with all the COVID around and it's getting winter is coming. I also try to stay healthy and get all the vitamin C that I can get. Well, those citrons are really sour. I don't know, maybe they're a little bit old, but I guess it's just healthy. Anyways, back to the Q3 earnings, and if you haven't seen my last video, here is the summary, basically my Q3 estimations versus the actuals. So my estimations have been largely beaten. They delivered 666 million in revenues. Only the other sales have been down in comparison to what they guided for. So I'm going more into detail of what this means. And they posted a better gross profit and operational income that I was actually anticipating. So this is why I was in a good mood when I saw the earnings report coming out. And on top of that, once again, a really great guidance in my view, because they increased the revenues that I was estimating actually to 921 million US dollars. And we now go in detail of where this is coming from. And second of all, they're guiding for 17,000 sales of vehicles sold. I was estimating between 16,000 and 16,500. And they say that the revenues per sale will actually stay high. So this is basically why I said that this is a very solid earnings report. It wasn't something totally unexpected, but it was better than my estimations and really a solid guidance. So I said that if there is a sell-off, that doesn't really matter too much in my views because the fundamentals are all intact. So let's look at it. Vehicle margin is on the rise, gradually improving from negative in the past. So with the Q2 earnings, for the first time, it jumped to almost 10% of vehicle margin, and now it's reported to be around 14%. And I think it could actually increase with the Q4 earnings to somewhere close to 20% when NIO is actually right to delivering at around 17,000 vehicles, because we can see as the vehicle sales are going up, also the vehicle margin is going up. So here a little bit flavor on the margins from the earnings call. So Li Bin, he also mentioned that yes, it's gradually improving here, but at some point in time, obviously we need to see that this cannot go endlessly up, because at some point in time they will obviously be out of places where they can save more cost. Right now the driving factors are two things. First of all, the increased production, so the economies of scale, and second of all, also the decrease in material purchases. And it's interesting to see where they say they make those savings, because they are with the electronical drive system plus the battery pack. And those things are actually 100% in the hands of NIO with their wholly owned enterprise XPT, which is a subsidiary of NIO, which is building this kind of stuff. And this takes a little bit of steam away from the arguments of some bears who are saying like, well, NIO is not vertically integrated, so there's not much cost saving that they can do. No, this is wrong. JAC, the partner which they're using to put the vehicles together, well, what they do is they take the parts and they put it together. So in this small activity, yes, NIO has to pay them a fee. However, their skateboard, the EV platform that they have developed, is 100% owned by NIO, and this is also where they make the cost savings because they produce it themselves. Also, a really big highlight is the operational efficiency. If you look at this chart here, you can see that NIO has a 30x efficiency from the sales and operations per vehicle sold. So in the beginning, they spent more than 70,000 US dollars per car sold in terms of the SG&A. So this is like marketing and sales. So for instance, the NIO houses, the NIO spaces, and also marketing activities that are related to the sales of the cars, and also other operational activities related to that. And they have dropped significantly to only 2,377 US dollars per car per delivered vehicles. So this chart is really showing you the operational efficiency that has taken place with NIO over time. And this also shows in the financial and business KPIs of NIO. So the CFO from NIO this time spoke about cash flow, and NIO doesn't really break it down. So I came up with my own definition here. I'm using revenues minus the loss of operations here. So in terms of, money coming in terms of revenues from the vehicles sold, minus everything they have to pay in operations is basically cash that NIO has at hand in order to use it as working capital. Of course, this doesn't mean yet that they are profitable in that sense, but they can use and reinvest this cash, for instance, for R&D, or also paying some more of the operational costs. And you can see here that in Q2 and Q3 we had massive free cash flow coming in, and the CFO also mentioned that he is positive that the cash flow is actually going to be positive over an entire full year scope here, and that would be a first. Of course, this is also one of the red flags or negatives here with the report, that NIO has still a quite big account payable, so they need to pay their suppliers still, and this is some cash that will be going out maybe in the next quarter, maybe in 2 quarters, but also NIO has been answering that before, actually in an earning call, and they were saying that this is now a new position of NIO, that they can actually negotiate new payment terms, so suppliers will be paid later. And this is once again one of the positive aspects of the NIO lean business model here. First of all, the direct sales model, so they don't have inventory, and second of all, they work with this network of suppliers and so on, which they can pay later, so they get the revenues from the sales immediately, then they can use it as work capital, and then later on they need, of course, to pay each of those providers. So this is the result of why the financials here are looking increasingly good. Now, not everything is stellar about this report, and I mentioned before that I'm a little bit of disappointed about the other sales. So if you watch my videos, you know that I'm looking that NIO is actually increasing their revenue stream so that they have more different sources of revenue, and also that the revenues of those other sales are actually increasing in comparison to the vehicle sales. And in this quarter, that clearly did not happen. So they missed on their own guidance of 46 million for other sales. But in the earnings call, the management team actually said that they are looking that this will be increasing in the future, and that this is not yet obvious yet. So I tried to make a little bit of a calculation here, trying to find out what is the reoccurring revenues per user. And you see the trend line, it's going a little bit down here, and currently it's sitting a little bit below $600 per quarter per user in the fleet. So one person that has one of the cars is not one of the new users that came into the quarter, but is an existing NIO user. And if you divide the other sales by this cumulative number of NIO fleet users, then on average they're spending quite a bit below $600 here. And in the future, this should find a bottom somewhere, because of course there are always new people coming in that are buying new cars, but over some time you have a larger base of NIO users actually that is larger than the new car buyers that is coming in. And then it's interesting to see how much money do they spend on e-commerce in the NIO app, on BaaS, so the battery as a service, and also energy subscription models and stuff like that. So hopefully we should see this number going up in the future, and then multiplied by the user base of NIO, which I think will get to a really enormous big business here. And of course, I had a couple of more open questions, and this is actually also going hand in hand with the other services and the gross margin for NIO. So here in the earnings call, they talked about the take rate for both battery as a service and NIO Navigate on Pilot. So if you follow my videos, you know that for the battery as a service, I was estimating around 20 to 25% of a take rate. That is close to what usually people are leasing. And you need to know that in China, most customers are actually preferring to pay something in cash. Credit is not seen as much as in the Western societies. So it's interesting to see that the BaaS take rate here is more than 30%. That was a big surprise to me, because it shows a big adoption already, that 30% of all cars that are being sold right now are being sold with BAS. And so it seems like this is a successful service launch here. And on top of that, the even more surprising number was the take rate of 50% of users that buy the NIO car now are actually also buying the Navigate on Pilot, which I think is even higher than Tesla on average in China. And before the update, the October update that now also made it possible for NIO cars to ramp on highways, overtake cars automatically, ramp off highways. Before that update, it was actually only before, I think it was actually quite low, around 20%. So we see the boost in Navigate on Pilot sales here, and this is also referring to a brighter future when it comes to NIO Autonomy there. Plus, of course, all of these services, BAS and Navigate on Pilot, are high margin products that are going into the other sales, and thereby they should have an impact on the gross margin, not so much in the vehicle margin. So as I mentioned before, the vehicle margin, they may stall at some point in time, but the gross margin, this should always go up in over time now as more people are getting sold up on those services like Navigate on Pilot, for instance. And then I had a couple of more open questions. So for one, regulatory credits. So with each vehicle that NIO is selling, they're earning regulatory credits as a carbon emission-free vehicle, and they can sell those credits to other OEMs that are producing gasoline cars, for instance, so they're polluting. And this is a mechanism for introducing new technologies that can actually reduce carbon emissions. So we weren't sure if this was already booked with the Q3 earnings. And in fact, they mentioned that those kind of sales from regulatory credits were actually not booked in Q3 yet. Instead, will be booked in Q4. So once again, this will be a boost for the gross margin. And also this is the reason why NIO has actually guided higher for the revenues in Q4 and thereby also exceeding my personal estimations. And this is great news that it wasn't already in this report yet, because otherwise this means that the NIO business wouldn't have been as advanced already. But now that we know that this is only coming up in Q4 and then next year even only to improve with more vehicle sales, also the regulatory credit prices getting even more expensive, this should be good news for NIO and investors. Then the last open question was obviously about the capacity. So can they increase the capacity and how do they want to do that? This is one of the most questions that I get, like how can NIO do that with the current partnership GAC? And I always say yes, they can do it with the current model. The factory is able to produce up to 300,000 cars. So that should be enough for the coming years. In fact, if you look at my business case, I said next year they're going to sell 85,000 vehicles, and during the earnings call they mentioned that in January they are actually trying to produce 7,500 cars monthly, so at this production rate, and that would already exceed my current projections for next year. So they don't even need to produce more than this monthly in order to meet my sales projections for next year, which actually mean a doubling, which actually mean a 100% increase of this year's revenues and also doubling in the vehicle sales, which is great news. It's a fast growing company. Now with that, this is also the answer to a couple of beer arguments whether or not they need to raise more capital. So far they also mentioned it in the earnings call that it seems that they have not to do another secondary right now because they have 3.3 billion in cash, which is also once again more as I was expecting. But as mentioned before, with the free cash flow and also with those open liabilities that they still have to suppliers, expect that the cash flow is a bit lower maybe in the next quarters, and that also the cash position will be reduced a little bit. However, it seems like they don't need to spend more money now on building, for instance, a second factory immediately. And also maybe it seems like they can actually grow their business right now, even globally so far, without raising too much additional money. They even mentioned for the R&D for next year, they may not exceed the current levels of spending. So this should also put some of those investors at ease that think like, oh, well, we get another dilution coming in with a secondary. On the other hand, in my business case, I always calculated for more dilution. And as a growth company, I think it's quite natural that they make offerings from time to time. So I wouldn't be surprised for that. But lots of people are obviously really nervous about this. And then the biggest surprise to me was what they mentioned about NIO and Autonomy, and also the production lineup. So they mentioned that yes, of course, they're going to launch the ET7, which will be based actually also on a new platform. And the core of this N-Tier 2.0 platform, how they call it, is a industry-leading platform in which they will have possibly a new chipset that is rumored. So I'm still a little bit skeptical whether or not they are going to develop their own chip, but looking for a higher integration when it comes to big data and the algorithms. And I have a really interesting video coming up specifically on this topic. I was just blown away by the speed that Lieben actually announced that already on NIO Day they're gonna talk more about those autonomy features and activities. It seems to me that they want to catch up a little bit more with the latest development of full self-driving of Tesla. As you may know, in the market is only NIO and Tesla that can actually do over-the-air software updates. They can access the firmware, so they can access really important hardware factors of the car, for instance the electronic drive unit and also other stuff that is necessary in order to make updates that can actually improve, for instance, the autonomy features of the car. So yes, we saw the bigger update with the Navigate on Pilot in October, now with the higher take rate, but it seems that for NIO this is not enough, and they already want to go the next step. And of course, if they're proceeding with autonomy and getting better in this regard, and currently Tesla is of course still the big leader in this, and they have the most sound strategy and the fastest approach to it and the most miles collected. However, it will benefit NIO shareholders and also the company if NIO is progressing in this regard, because definitely this enables new revenue streams and larger markets to tap into. So really surprised about the timing, that they are going so aggressive and want to announce something on this already in January, and also with that 2 new models, so the ET7, which will be based on this new platform already, and surprise a second sedan. Well, I'm looking forward to it. Maybe the ET7 will be more comparable to let's say the Model S, and on the other hand the new sedan that are planning might be more in the league of the Model 3, so lower priced. I have no idea. It will be exciting to see what they come up with, but usually NIO only makes 1 new model per year, so it seems like NIO is really accelerating here. So for me, it's really hard to keep up with all of this, and I haven't even finished my second valuation of all of those new revenue streams like battery as a service, the NIO Navigate on Pilot, the e-commerce business and everything else, and now they're already leaping forward to autonomy, so it will be really a tough time for me to keep up. But make sure to subscribe to the channel and hit the bell button that you get a notification whenever I post a new video going deeper into those topics, because I have so many things lined up in this regard. And as always, please consider to become a Patreon because I do some posts on those issues before I actually make a video about it. For instance, yesterday we also saw a huge spike in 2 investments that I'm making. I already talked about in some videos here that I'm invested in both Futu and Tiger, which are online brokers in China, and I have invested into them because I think online investment has really taken off in China. And also many mainlanders are actually new to also trade US listed Chinese stocks, which this channel is all about. So I see a big potential for those brokers, and also they could actually even replace the investment banks in the future. So possibly next week I will make a more in detail videos on those kind of stocks. And of course next week we also have the Huami earnings call coming up. So lots of topics to cover. Thank you guys for watching. I hope there are still a couple of people interested in NIO and on board of the train, because I do think that this story is far from over. So happy to cover it here on the channel. Enjoy the weekend, and thank you guys for watching.